Good evening and welcome back to the Weekend Edition. My name is Peter Resnicek from ShadowTrader.net. Always good to be back with you. Wow, what a week. We had major volatility off of the low end of that channel I've been talking about. And the rally was so large that in the futures market, given the ES and the NQ, both of those have actually broken their downtrend. So if you look at the market just in relation to the futures, ES and NQ, downtrends are now broken, but the cash markets are a little bit different. They're a little bit mixed up. We don't have that same trend line break happening in the S&P yet, but we did get that trend line break in the NASDAQ 100, which is really, really interesting. Now, I've added a new slide here to the beginning of this show, and it's called the Week in Review. And I want to start with this week. This is basically a rundown of everything that's happening in the three major averages that we look at, all 11 sectors in the S&P, and then some key commodities here and bonds volatility and Bitcoin as well. Now, as I go through the different data points here of the sectors and of the major averages and these items here, one of the things that I want you to do as the viewer is to be paying attention to where there might be outliers here, because even though this is a look back at what happened in the markets over the course of the week, it's also an opportunity. You want to think of it as an opportunity because you may be able to have some follow-on strength or weakness in some of these items when you see outliers. Now, just to explain exactly how the percentages are calculated, since it is the week in review, everything you're seeing here is always going to be from the Monday morning open to the Friday afternoon close. So all of these percentage changes here, again, are from that Monday open to the Friday close. So starting over on the left side, obviously S&P, NASDAQ, Russell, all about 4 to 4.5% up. Pretty solid week because, as I was saying, all this is measured from Monday to Friday. Monday was essentially when we came down to the low end of the channel and rallied since then. In the 11 sectors, smattering of strength all over. I think the outliers here were materials, utilities, definitely energy. Energy's been strong for a while. I talked about that a couple of shows ago, that before the end of the year, I believe there was going to be some strength in energy. We had a little bit of good strength in industrials. Financials were fantastic, up almost 7% on the week. I think that's the highest one. And XLK, which is the largest sector in the S&P, was up about 4%. Now, if we look over here, bonds definitely came up a bit. Makes perfect sense because what I think fueled some of the bullish action this week is that we got a little bit of a cooling down in rates. Notice that your TNX, your 10-year yield here, down 3.3% for the entire week. That was definitely helping the market a little bit. And as you can see, it helps some of those more interest rate sensitive sectors. You can see utilities up 4.5% here, real estate up almost 5%, and by the same token, also bonds up a bit, and just basically going hand in hand with all of that. Volatility got crushed. Makes perfect sense because it had a really large move up in the markets. That's a big move down. I mean, almost a 25% decline in the VIX. Gold was up, again, interest rate sensitive somewhat. Rates came in a bit. Gold rallied about 1%. Oil rallied about 1%. That's helping that XLE. And Bitcoin was obviously the clear winner here in this column, up almost 11%. There were some intra-week lows there of about 93 to 94,000. I don't remember exactly, but we closed well up over 100,000 by the end of the week. So Bitcoin very, very strong. Obviously, all of this only matters in the sense of how it translates into the charts. So when we get into the next segment, which of course is the most important, we're going to see how all this played out in relation to the technical charts themselves. Always what I feel is the absolutely most important segment of this entire program, because it is, of course, when we look at the charts of the majors to tell us what's really going on, right? That is really what's going on. All the fundamental mumbo jumbo, everything that happens in terms of economic data, even with earnings reports, none of that matters as much as how it translates onto the charts. And this week's charts are very, very exciting. We actually have a lot to talk about here. We always start out with this S&P 500 daily, and there's two main takeaways from this chart that I want you to remember when I finish this segment, all right? So the first takeaway on this chart is obviously we had this big rally here off of the lows in the cash market. However, as I was saying in the intro, we have not yet broken the downtrend in the cash market. Now, in the futures market, this downtrend is broken. I'm not going to break it up here and show you that chart, but you can do it yourself, /ESH25, of course, is the ticker. And you'll see that the futures, because they trade 24 hours, they do have a different chart pattern than the cash market. They've actually broken trend already. So if you look at the markets just vis-a-vis the futures, they are no longer in a downtrend, but the S&P is still in this downtrend, so just be aware of that. Even with this rally, you haven't broken the trend and you're still in the downward channel in the S&P. As I was saying, there are, however, two takeaways. That's the first. The second takeaway is the fact that we moved up so aggressively this week that we left not one, but two unfilled gaps below us. And this is very, very important to carry forward because it is a sign of strength in the market. Those of you who read my Peter's Pre-Market Perspective every morning, you know that I always talk in terms of narrative. What I write in the report is that day's sort of diary entry into the narrative. You want to keep this ongoing narrative in the market. And we call it a narrative because what we're doing is we're always taking older information into account as it still has relevance to today. So this older information really needs to be entered into your narrative in such a way in that for now it is bullish. And the reason it's bullish is because when the market advances very quickly on momentum, as I believe it was happening this week, and it starts to leave structural deficiencies in its wake without correcting those structural deficiencies, that tells you that the market is getting stronger, because normally what the market does is it backs and fills, right? It'll go 3 steps up, 1 step back, 3 steps up, 2 steps back. When it starts going 3 steps up, 3 steps up, 1 step back, another 3 steps up, that tells you that momentum in that direction is increasing, and you see that by leaving those unfilled gaps. If you read my morning report, you know we talk about all sorts of deficiencies and structural things like this in the profile, not just gaps, but single prints, points of control that are left untested. We call those virgin points of control. When all those things start to stack up and you have all that stuff behind you that never got tested or filled in, it's basically a sign of strength. So keep that in mind. Back-to-back unfilled gaps. What I'm going to be looking at in the earlier part of next week and basically all through next week is watching very closely to see, first of all, if the upper gap here gets filled at all. If the market cannot even fill this upper gap at all, that's going to be a pretty strong sign of strength to me. I mean, my overall take on what's going to happen going forward here is that more than likely we will not retest this lower end of the downward channel anymore. Whatever pullback we have from here, I think is going to be shallower to a higher low and then retest again. And that, of course, would be a relatively strong buy signal. But just given that we've had all of this chop here and this move down here was almost 100% retraced, and like I said, you've got the big gaps that are holding so far, I'm looking for a more shallow pullback and then a swing higher into next week's trade. Onto the NASDAQ 100, which, as I was saying in the introduction, this is noteworthy that it actually broke trend. The S&P has not. So remember, S&P futures, NASDAQ futures, both of those have broken trend. S&P cash market has not broken trend, but the NASDAQ 100 is technically not in a downtrend anymore, because notice that the action is here. Here we established our trend line. This right here is the fake out move, right, where we actually had some price action above and then the next day was a strong day down and it continued down towards the lower end of the channel. If you recall from last week's program, this is where I got into a little bit of trouble with that losing NDX trade. But since then, look, almost a 100% retracement all the way back to here, and more importantly, a first daily bar in a long time, ever since these highs here, a first daily bar that is now closed above the downtrend line. And the way that I look at things technically is that you must have a daily bar close above a downtrend line in order to say that you broke the downtrend. So this activity that we saw here, this did not break the downtrend because neither of those bars closed above the line, right? But now we have actually a confirmed close above the downtrend in the NDX. Now, obviously, there's a little bit of push-pull here happening because that S&P has not yet done the same. It's still lagging, and if you recall from the last chart I showed you, it still has a little bit of work to do before it even gets to the downtrend. So it's going to be very interesting next week to see how these two markets act, with this one kind of having free reign here, ready to go, and the other one still just underneath that resistance point. So it should be some interesting trade in the early part of next week. Time now for our sector spotlight. This is the portion of the program where I talk about just one of the 11 sectors in the S&P 500 that I think could be in play. Essentially, I want all of this material to be a look forward for everyone, to basically give you ideas. I really have no interest in just running down what happened other than a little bit at the beginning of the show. So for this week's sector spotlight, in that vein, it is going to be XLP, which is consumer staples. Kind of a pullback here for a while. What's noteworthy about this sector, and the reason I purposely chose it, is that we have been in a situation recently where rates have been moving up that is indicating inflation being sticky, right? We know that rates have moved up almost to 5% on the 10-year before pulling back this week. That hurts the stocks in this sector because even though these are companies that deal in the items that are necessities for everyone, right? The input costs of those necessities, to the companies that provide them rise, right? Because those input costs are going up, it makes their cost of goods sold higher and it hurts their bottom line. So you'll often see consumer staple stocks pulling back in an inflationary period, and that's what we just got through seeing. So that's why I want to start on this chart here of the XLP, and you can see the move down here, right? This is the move down that is essentially corresponding with that move up in rates, confirming inflation is there. As I was saying, these companies take a little bit of a hit. But notice where it stopped recently, right? If I pull back over here, look at this classic double bottom low here, right around this 76-ish area, and notice where we caught support. And now we're starting to move a little bit higher. So what I want people to be looking for here in the XLP is that if there is some sort of a pullback here, you want to be looking to make sure that this low does not get lost. As long as that low doesn't get lost, I think that stocks in the consumer staples sector are going to be a buy. So be looking for either a straight move up from here or, again, some sort of a pullback that comes into a higher low, doesn't come down to this low, and then starts to turn around and move higher. You've got clearance here just up to the 21, which to me is already a trade. If you're looking in the very short term, you still have a big gap here between here and the 21. And notice that you can go all the way back to here when you broke down below the 21. That's where you got essentially what I call the pinch, right? The pinch is when the 8 crosses over the 21. You can see it right there. You've got the pinch. That's really what confirms the price action even more. So, excuse me, what I think could be happening here, if this develops the way that I think, is that there's actually a number of stages to this trade. And depending on what your time frame outlook is, that's the different things you're going to be looking at. For instance, shortest time frame outlook would be a buyer early next week targeting that 21, right? Longer time frame outlook buyer would be perhaps entering in tranches, buy a little lower, whatever, as long as we don't lose this low, and then be waiting for the pinch, right? Because the pinch hasn't yet occurred in the other direction. So notice that this dotted green line is well below the 21. So let's just say that this 21 goes like this, and then the 8 catches up, and then boom, you have the pinch. That's what we call the pinch when the 8 goes up through. That's more of a longer term confirmation signal, and that is also a place where longer term buyers are getting more active. So those that are already accumulating positions in here, they may be adding to it when they get that sort of a longer term signal. So think in those terms. But either way, whether you're long term or short term, I think there's potential for consumer staples to move higher here. And again, your sort of uncle point right here where you know the trade isn't working anymore is if you lose that key 76 level. Before we get off this consumer staples section of the program, I want to leave you with one extra chart, which is, I think, going to be a good trade idea going forward. This is Costco, ticker COST. And I'm bringing this up specifically because, believe it or not, it's the #1 heaviest weighted stock in the XLP. So you can't really talk about XLP without talking about Costco. And it's really strong here. I think we're coming off of a higher low here, which I like. I like this sort of tight consolidation here where it's kind of been bunched up for a bit. This stock has been extremely strong all, prior to this move down. And notice that you've also got now a test of a prior high right here. You kind of closed it on Friday. And I saw a lot of relative strength in this stock on Friday, and that if you recall, if you're watching the markets closely, you know that late day action in the S&P was actually a pullback, right? We actually pulled back a bit. We did not close near the high of the session, but look at where Costco closed, right? Right up near the high of the session. Very, very strong. So looking pretty good. So again, if you're bullish on that XLP, go with the leader in the space or the heaviest weight in the space. I think it's Costco, and I think it's got some room to move higher in the weeks to come. This segment is no longer new, but it's still newer, right? This is one of the segments that I added into the show recently. I call it Charts to Watch. And in this segment, what I try to bring your attention to is just one chart in the market that I feel is going to have some impact on what the market is going to do. So if you recall, we recently did a couple of charts to watch on TNX, right? Talking about those rates because it was very important as they were rising. This week rates were falling, but as they were moving up towards that 5% level, it was definitely a factor in making the market pull back. So it could be something about rates, could be bonds, could be the VIX, right? That would be a classic charts to watch. This week's is a little bit different because I decided to go with a individual stock, and you'll see in a moment which one it is. It's actually Apple this week, and we're talking about Apple specifically as a chart to watch for a couple of reasons. One, it is kind of a bellwether for the market, right? As Apple goes, we would think so the market would go, but that wasn't true this week. There was plenty of strength in the market outside of Apple, but Apple showed a lot of relative weakness. But it's still important to note because the way that the S&P 500 is structured, remember, it is a capitalization weighted index, and being that Apple is in what we call the $1 trillion club, there's a handful of stocks that have $1 trillion valuations, Apple being one of them, it is almost 7.5% of the entire S&P 500. And just let that sink in for a moment, in that you've got 500 stocks there in the key benchmark index that everybody around the world is watching, and one stock is over 7% of that entire index. So that's why Apple is actually the chart to watch this week. Let's head on over to the chart, where I want to mark up this daily for a little bit and just show you some of this weakness and where we might find some support as well in the stock. So again, as the market was rallying all this week, Apple was actually down. It's actually down pretty sharply. All of the sessions of this week were mostly down, especially Thursday when it really got hit. As you know, I am a pure technician. I don't really care about the fundamentals, but if you need to know what the why is instead of the what, even though I like to always concentrate on the what, they lost a lot of market share in China, and they are now no longer leading as far as phone sales. Some of the more local companies that are making phones in China have now ticked up ahead of Apple in that race. And that's obviously what the stock is kind of keying off of, in that news is obviously negative for the stock, and that's what took it down. But again, the chart is what matters the most. So definitely a downtrend here. You got a pinch up here, 8 below the 21. 8 EMA is kind of down far. Prices are well extended off the 21. And more importantly, will the stock fall now under its own weight and move down to this support area, right? This is what we call a major support, because a major support is one that is a support area before a higher high. This is obviously support here, and this is a higher high. So this is a major support. It's very, very important. Coming in around the 220 area. It's actually 219.71 to be exact, but let's just call it the 220 area to simplify it. We don't have that much more to go from there, and I think prices could be pulled to there. You can see currently we closed just around 230 at the end of this week, and so obviously we've got just a few more dollars to go down to that level. So that's what I'm going to be watching for this week, to see if that comes down to that level. And as I was saying, or I should say, as the video today is titled, for that reason, will Apple tank the market, right? Will this sort of weakness bleed into market, or will the fact that this is 7.5% of the S&P be enough to hold the S&P back? You got to ask yourself that question, right? Is that what's causing any of the weakness in the market or not, and will it continue, all right? Now, given that I think that this 220 area is a key support, I actually have another chart to share with you that I think is really interesting, and I've put it up over here. I've taken some time and I've gone backwards, and I scrunched the chart a bit for you, and I've just looked at what the percentage move was on all of the last pullbacks in Apple. You can see it's 1, 2, 3, 4, 5. This is where we are right now. What has happened in the last 6 pullbacks of Apple in terms of a percentage move? And I thought that this was important because that 220 may just be a very strong support, and it could be a very great buy point, right? You could easily run that stock from that level back up to 240, and it would be a phenomenal trade. So let's just look at the percentage decline in relation to past percentage declines. Back here, this is 2023 here. This is 2022 back there. So in 2022, about 3 years ago, we had a 28% decline, and then soon after we had a 30% decline. Now, one thing that I think is noteworthy is that these large declines in the stock happened when the stock was failing to make higher highs. It was essentially in a rotational phase, right? Basically 100% rotations back and forth, not making higher highs. You'll notice in a second, once we broke out of that rotation and moved up here and made a higher high, notice that the pullbacks then have been a bit more shallow. This pullback here was about 16%. This one here in 2024 was about 18%. Later in last year, this was a 17% pullback, which brings us, of course, to where we are now. This move coming off of the 260 high thus far has been 12%. So it makes sense also that if we were to come down to that 220 support, what is this percentage going to be? Probably a little bit closer to these two. And it's very interesting that the last 2 times that Apple pulled back, 17%, 18%, which, like I said, that could be what happened then. Big rally, big rally. So something to keep in mind. This is just sort of a historical visual representation of past 3 years in Apple. How deep have the pullbacks been? If we get down to that support level, what's that 12% going to be? And what has happened in the past whenever we've pulled back about that 17 to 18% in Apple? I like to end each program with this newer segment here called Looking Ahead, so that you can be armed with the knowledge you need for next week's trade of what the key economic data is that's coming, and also what are the key earnings reports that are coming. Obviously, we're in earnings season now. I don't talk about all of them or show you a gigantic laundry list every day, 20, 30, 50, whatever different companies report. I'm only interested in those that have potential to move the market, right? So in that vein, remember, next week is going to be a shortened week, MLK Day on Monday, but after that we've got lots of earnings reports and economic data. So let's take a quick look here at the slide at what's happening. As I was saying, closed on Monday. Not too much economic data here in the front end of the week, but big earnings reports that are important, right? We've got Charles Schwab in the financial sector, Capital One also financial sector. Then over here, Interactive Brokers, aka IBKR. This is United Airlines. And this one is probably the most important right here. Netflix is going to report after the close on Tuesday. That usually gaps up or down pretty big, and that can have a lot of effect on the NASDAQ 100 futures and, of course, the market itself. So keep that in mind. Netflix, I think, is the one that I'd be focusing on next week on Tuesday. Moving into Wednesday, Procter & Gamble and Johnson & Johnson. On Thursday is where the economic data starts to pick up. Initial claims and continuing claims, those are always market movers. And then we've got American Airlines, GE, Texas Instruments, and ISRG, Intuitive Surgical. And rounding out the week, there will be existing home sales on Friday, and American Express also kind of runs with financials, ticker AXP, and Verizon, which is in the communication space. That's a part of the ETF XLC, which is, of course, one of the 11 sectors in the S&P that we always watch. So main takeaway from here, I would say, watch that Netflix really closely. Some of these other ones here, probably not going to move the market as much, but definitely could be setting up for a trade, right? If you can catch that earnings move the next day in the right direction, there's usually some relatively large movement. And again, economic data relatively quiet in the beginning part of the week, but Thursday and Friday here, mainly Thursday, is where you want to be looking for those initial claims and continuing claims coming at you on Thursday. And that's my show for this week. Thank you so much for hanging out with me as always. Remember, if you can, hit that like and subscribe button, and also the little bell to be notified whenever ShadowTrader posts new content, which, as you know, is every day. Remember, we have our Shadow Shorts coming out every evening, short 3 to 5 minute videos, usually trade ideas or telling you something very salient, very important about the market, easy to digest, and you can sign up for those on our homepage. All right. As far as the markets are concerned, we've got a couple of different key areas that we need to focus on next week. Futures, above the downtrend lines, both the ES and the NQ, see if they can hold, right? S&P cash, not yet above the downtrend line, so you're gonna see what happens when you come to that line. I showed it to you very clearly in the chart over there. NASDAQ, however, is a little bit different. It's stronger, it is above. Next week is gonna be all about the interplay of not only those lines, but the unfilled gaps that we have below us, and we wanna see if those gaps are either gonna fill or stay unfilled. As I was saying earlier, staying unfilled is the most bullish outcome, and that probably points to a market that is a little bit higher, right? Apple is the outlier here, right? The stock has been really relatively weak. It's 7.5% of the S&P, so we're gonna see next week, does it actually drag the market lower? And more importantly, if it does move lower, will there be a buying opportunity in that 220 support area, which could be a really nice trade for everybody involved at that area, all right? That's all for this week. Again, thank you so much for hanging out. As always, I wish you good trading. Good night. I'll see you next week.